We'll call the meeting to order. We'll start with the pledge allegiance.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Everybody mic'd up?
More. So,
Can I get a
sorry.
motion to approve the agenda with 3.1 additions? 3.11, approve a request for variance for Dr. Clint W. Willert for stand-in community education director.
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. Number 4, public forum. Number 5, presentation. 5.1, Matt Taubert, audit report.
Okay, I think everybody should have a copy.
Oh, yeah.
So I'm going to start my presentation on pages 3, 4, 5, and 6. And what we have on 3, 4, 5, and 6 is our independent auditor's report. This is where we take responsibility and render our opinion on the financial statements. And what this report states that in our opinion, the financial statements that come after this report present fairly the financial position and the results of operations of the district as of and for the year ended June 30th, 23. It's an unqualified opinion, which is exactly what you are shooting for. It's the highest opinion we can render. If it were something other than unqualified, I would be talking to you before this evening, but that's what you want is an unqualified opinion. And with that said, I'm going to move to the financial data. We're dealing with a 101-page report. So I'm going to take you to information that I think as board members you will want to see in the best detail and format that you can look at. Again, I'm going to put myself in your position. So on page 73, if we can start there, from page 73 to the bottom of page 77, we have the general fund activities. In the front of the report, the information is very condensed. In the back of the report, it's broken down in more detail. So this would be our more detailed schedule. General fund format is first column is budget, second column is the actual results, third column is the variance for the budget, and the far right-hand column is the prior year 22 actual. I'm going to kind of just hit totals as we go along with a couple of things that I've got notes on. In the general fund, the bottom of page 73, the district budgeted for revenues of $14,919,351. Next column over, the total revenues came in at $16,132,037. So you did better than budget by $1,212,686. I always compare prior year to current year with revenues. I took the COVID revenues out of there. Hopefully that we're to the end of that and don't see that again, at least in my lifetime. If we take the COVID revenue out of there, the revenue for 23 is actually about $550,000 higher than the 2022 revenue. Again, taking the COVID funds out of there. Probably one of the more primary ones is the general education aid, about the middle of the page. We're a little over $600,000 over budget in the general education aid and approximately $530,000 higher than the previous year in the general education aid. General education aid and special ed are the two aids that kind of are subject to the most fluctuation when we estimate that with Jackie at the end of the year. The last published report at the Department of Education is November 17th, and we're spot on with their numbers. So we got the most current information in there. That can be a moving target right up until January, February, March, even a little bit later than that. But so I'm comfortable. Those are the two biggest estimatable numbers in the financial statements that we're very close on both of those revenues. And with that said, then I want to change to page 74. Here we're going to start with the expenditures. Again, same format: budget, actual, variance with the budget, and then the prior year's actual. Again, I'm going to hit totals here. Total administration at the top of page 74 was budgeted at $982,133. Actual was $929,568. So the district was under budget by $52,565. $11,000 less than actually the previous year. Next category down, district support services, $382,684 was budgeted, $386,048 was actual, so we were a little bit over budget, $3,364. Expenditures were up about $18,000 compared to the previous year in district support. Then the next category we've got is the start of regular instruction. That's broken down into 4 different categories. Under regular instruction, the first category is district-wide. $517,662 was budgeted, $651,440 was our actual, so we're over budget by $133,778. Then the next category is the elementary school. Bottom of page 74, $2,905,638 was budgeted, $2,977,505 was actual, so we're over budget by $71,867. Then at the top of page 75, we've got the middle school. Budgeted is $1,238,719. Actual came in at $995,639. So we're under budget in middle school by a little over $243,000. Then the secondary school, about the middle of page 75, total secondary budget was $2,886,867. Actual was $2,994,809. So we were over budget by $107,942. When we take all 4 categories, which would be district-wide, elementary, middle, and secondary, we had budgeted for $7,548,886. Actual came in at $7,619,393. Collectively, on $7.5 million of regular instruction, you were within $70,507. That's less than 1% budget variance from the budget that was adopted. So collectively, that's very close. I mean, less than 1.97%, 0.93%. So that's very close. The last category on page 75 is vocational instruction. That's $374,902 was budgeted, $331,162 was the actual, so under budget by $43,740. Then the top of page 76 is the exceptional instruction. That was budgeted at $2,214,624. Actual was $1,954,196, under budget by $260,428. And then middle of the page, 76, $822,142 was budgeted, $778,905 was the actual, under budget in the instructional support by $43,237. Then pupil support services at the bottom of 76 was budgeted at $1,681,850. Actual came in at $1,758,391. So a little bit over budget, $76,541 in pupil support. And top of the next page, 77, site buildings and equipment, budgeted at $2,104,276. Actual was $2,117,164. So $12,888 over budget. And then the fixed cost programs, which is the property insurance, budgeted $132,559, actual $132,559, so no variance there. Collectively, taking all the expenditure categories from the previous pages, district-wide, there was budgeted expenditures in the middle of page 77 of $16,244,056. Actual came in at $16,007,386. So the district was under budget in their expenditures by $236,670. As a percentage of the total budget, you're within about 1.5 or 1.45% of your total budget expenditures. So again, that's very close on $16 million. That's very close. When you subtract those expenditures of $1,607,000 from the revenue on the first page, we have excess revenues of $124,651. Then we've got other financing sources and uses. These are additions and subtractions that are not part of the regular operations. Insurance recovery of $31,028. Transfer out of $143,747 to the community service for junior kindergarten. So we've got other financing uses of $112,719. When we combine that with the excess revenues of $124,651 above, we have the general fund going forward by $11,932. Ends the year with a positive fund balance of $7,378,022. If I can have you just maybe stick a finger in this page and turn to page 41, that total $7,378,022 fund balance has various categories in it, so I just want to kind of run through those with you quickly. the bottom of page 41, of that $7.3 million fund balance, $109,372 is set aside as what's called non-spendable fund balance for prepaid items for expenditures that'll be recognized in FY24. Then on page 42, if you just read down in the restricted fund balance under the general fund heading, starting with student activities and ending with medical assistance, total restricted fund balance of that $7,378,000 is $1,436,664. That's restricted for those various spending categories above, and the only activities that can come out of there are activities in relation to those spending activities. Then the bottom of the page 42, there's $59,149 of that $7.3 million that's set aside for severance. And then at the top of page 43, $26,130 is set aside for these four categories as assigned fund balance. So the very last one under general fund, about the first third of the page, $5,746,707, that is the unassigned fund balance that's available for basically all district use. So the total of all those totals up to the total fund balance, which is on page 77 of $7,378,022. The district has a policy of trying to retain a fund balance of between 25 and 34% of an average year's expenditures in unassigned fund balance. The 3-year average expenditures is a little over $15 million, and I personally think those are probably a little high because those include a considerable amount of COVID expenditures. But using that, the district would in order to maintain that 25 to 34% fund balance, in using the computation of what your unassigned fund balance is to a 3-year average, you're at a 38% fund balance. You've got 38% of your fund balance is equal to 3 years of expenditures at 38% is what your fund balance is. You want to maintain a 25 to 34%, so you're about, depending on whether you go to the 25 or the 34, you're 4%, you're 10 to 4% above what your minimum funding balance is for maintaining an unassigned fund balance. If you're going to maintain 25 to 34% of average year's expenditures in unassigned fund balance, you have 38%. So depending on whether you use the bottom part of the scale or the top part of the scale, you're 4% or you're 13%. But you're right a little bit over your minimum required, so that's good. Any general fund question I can answer for anyone? The expenditures are really pretty straightforward. The revenues are general education revenue is up, which is good. If there aren't, then the next category of funds I want to deal with are the special revenue funds. They're on page 80 and 81. On page 80 is the food service fund. Same format, budget, actual, variance, and prior year actual. About middle of the page, total revenues in the food service fund were budgeted at $923,463. Actual expenditures came in at $957,022. The district did better than budget by $33,559. And in the expenditure category, $1,032,708 was budgeted. $831,929 was the actual. So we did better than budget by $200,779. Subtracting those expenses from the revenue above, food service fund went forward by $125,093 and ends the year with a positive fund balance of $788,392. The only good thing that came out of COVID that I see out of all my clients and everything is my food service funds in my school districts got healed up. And that is the only good thing.
The one thing we didn't want to grow, right, Jackie?
Yeah. That's it. Everybody's now wishes they could throw the anchor out on the food service fund. Yeah. So I don't know if you've got spending plans within the food service fund. You know, that's just, having excess, it's not something we're used to having. Generally, it's a transfer from the general fund to prop it up. Then on page 81, we've got the community service fund. Again, middle of the page, total revenues are $440. We're budgeted at $447,963. Actual were $306,492, so we were under budget in the revenues by $141,471. On the expenditure side, budgeted for $436,578. Actual was $355,001, so we actually were under budget on the expenditures as well as the revenue by $81,577. Subtracting the expenses from the revenue above, we have a deficit of $48,509, and we've got the transfer in from the general fund for the junior kindergarten. So overall, the food service fund went forward by $95,238. Ends the year with a positive fund balance of $585,400. And if you could stick your finger in here and go back to page 42, that $585,400 fund balance is reserved. If you look about right in the middle of the page under special revenue funds heading, there's a community service fund heading starting with community ed at $190,338, ECFE $288,424, and learning readiness of $106,638. That is the balance of that $585,400. So that money is restricted for those various spending categories listed on page 42. Any food service or community service fund questions I can answer there, that's pretty straightforward as well. If not, then the next fund I want to deal with is on page 83. This is the capital projects fund. This is basically the building fund. This is finished up now in '23. There was revenues of $2,200, expenditures of $315,090, and when we subtract the expenditures from the revenue above, we have excess expenditures of $312,890. That fund began the year with a $312,890 fund balance and ends the year with a zero fund balance and is basically closed out. And capital projects funds are temporary in nature. They're set up to take care of a project. Once that project is done, then they're closed out, and you will probably now have a new capital projects fund for your new activities. But we started out with zero, and that one will now stand on its own. And then on page 85, we've got the last fund we've got to deal with. This is the debt service fund. This fund exists strictly to receipt in property tax levy and state aids in regard to bond issues. Middle of the page, total revenues were $1,818,305 budgeted. Actual was $1,841,24. The district did better than budget by $21,819. Expenditures were budgeted at $1,836,850. Actual is $1,836,850. Those are all fixed amounts, so we hit that one right on, no budget variance. Subtracting that expense from the revenue above, we end up with excess revenues of $3,274 and end the year with positive fund balance of $397,440. Via the levy, this fund, if in an ideal world, when the bonds are paid off, this should come to zero. Of course, we'll have the new bonds to issued to include here and include that with our debt service. But $397,440 is our fund balance, and that will just carry on and be used in future debt service payments. I do want to just bring to the district's attention, for those that are curious about the paying for the bonds, middle of the page, school bond, ag credit. Of the total revenues in the debt service fund of $1,840,124, $785,856 came to the district via the state through that bond credit. It's a little over 43% of the total revenue in that fund, so it's a big number, real big number. Okay, the last things I have to deal with here start on page 87. I point this out just for your information. This is on 87 is the schedule of expenditure of federal awards. This schedule outlines all of the federally funded programs that the district received monies under. It's going down. The COVID funds are not in there anymore. In 2019, this was about $830,000. 2020, it was $1,031,000. 2021, it was $2.18 million. Last year, 22, it was $2.8 million, and now this year we're at $2,341,377. So the COVID dollars are going away, but we'll be back to mostly food service and title programs. Okay, then on page 89, 90, and 91, we have another independent auditor's report, and this has to do with internal control and compliance. During the course of our audit, we look at the district's internal control, which is how transactions move through the district, including board approvals and various internal office procedures. And we also test your compliance with a publication called Minnesota Government Auditing Standards, Government Auditing Standards, and a publication called the Minnesota Legal Compliance Audit Guide for School Districts. And we have, pleased to report, we have no instances of noncompliance with either one of those. In regard to internal control, we have two findings which have been in all of the district's reports, and all of the district that our firm audits, and all of our nonprofits and cities, with the exception of the city of Pipestone, will deal with two small findings in our findings and question costs in just a moment. And on page 92, 93, and 94, we have another independent auditor's report, which is basically the same thing in regard to internal control and compliance, but this has to do with compliance with the federal regulations regarding your major federal programs. The major federal program that the district had this year was the ESSER program, and that is the one that we tested the significant compliance on, and there were no instances of noncompliance with the ESSER regulations that are published. And then on page 96 and 97, we have those two findings I mentioned earlier, starting on the page 96, finding 2023-001 has to do with segregation of duties. The district is right on the edge of having this one removed because of the people that work in the accounting functions at the district. Our quality reviewers, the firm that comes in and reviews our procedures that we do, suggested that we continue to put these into our school districts, even though they, some of them have more staff than others. And it basically has to do with the fact that we have a limited number of personnel in our accounting functions. And there's just nothing you really can do to do that other short of hiring additional people to get involved in the accounting functions. I tell my boards, school district boards, city councils, that type of thing, you're part of the mitigating circumstances in that, so if you have questions, ask your questions, and until you get an answer you're happy with. I'm not saying you're not going to get an answer, but continue to ask the question till you get an answer that you're satisfied with. So you help to mitigate that lack of segregation of duties. And then on 2023-2 on page 97, GAAP financial statements. Our responsibility as auditors is to render that opinion on the very first pages we talked about when we started. But as part of our agreement with all of our nonprofits, school districts, and municipalities, we also prepare the financial statements, with the exception of the city of Pipestone. And it's not something that we send Jackie to. In fact, Jackie, out of all of my school districts, she would be the first person that I probably could, with a significant amount of training, get her, that she could prepare the financial statements in accordance with general accepted accounting principles. Yeah, she is the only one. But it's not, it doesn't make any sense. It's not something we send her to a half a day of class and she comes back and does it. There's about a 197-page disclosure checklist for one of these, and I don't think has any desire, and I would not suggest that this comment has nothing to do with the work that's getting done. It has to do with the preparation of these financial statements. So I just want to make sure that's clear.
Yeah, and I think you've made us aware
Yeah.
of this every year since I've been sitting here.
We are really hoping that our accounting profession will not come to a point where they will say that we cannot do this anymore. Because when every one of our school districts, we have to have another partner in our firm that didn't work on the audit review the file cold because of this, because I'm too close to it. I'm not independent to the financial statements because I prepared them. So we have to have a second partner review. Knock on wood, that has sufficed to get us off the hook, but there's a possibility that for districts that don't prepare them internally, that you have to have an accounting firm come in and prepare the financial statements, and another firm will come in and audit them. But at the end of the day, you're still going to end up with basically the same book, only probably, I'm guessing, $3,500 to $5,500 fee. And that's,
Jackie, you're going to school.
it's just crazy. It's just crazy. You know, the larger school have people on staff that can do it, or templates and things like that.
Yep.
It's just not economically feasible, but I don't think that's gonna happen. Our quality reviewer does not think it's gonna happen in the near future, but that's what we have to go through, a process of having an independent partner review the financial statements that had nothing to do with the client at all, so we're able to bypass that with that. Then everyone, I'll do this part quickly, everyone should have 2 loose letters in the back of their report. If they got put together right, there should be one that says management letter at the top. Behind this letter is the adjusting journal entries that we made most of these with Jackie's assistance. These are normal year-end journal entries. There was a point, probably 8 or 10 years ago, when this was a long list of adjustments that we would do. We would compute the state aids, we'd compute the property taxes, we'd compute a lot of the year-end accounting things. Jackie is down to the point where she's doing virtually all of those now, so this is, these are 10, what I consider to be very minor, normal year-end adjustments, as opposed to back when we had several pages of this, so that's very good. These have been posted to the district's records, and they have been reconciled to our audit report, and so they agree with, the audit report agrees with the information that was provided to the state at November 30th. And then the next one says communication with those charged with governance, conclusion of audit, significant audit findings, qualitative aspects of accounting practices. If there were any new accounting pronouncements that we had to apply to the financial statements, we discussed those here. There have been some new pronouncements, but they have not applied to the district. Page 2, we're required to bring to your attention any significant estimates in the financial statements. And in my opinion, the 2 most significant estimates are the computation of the general education aid and the special education aid. And as I mentioned earlier, we're spot on with the most current published amount with the Minnesota DOE. Middle of the page, difficulties encountered in performing the audit. It says no significant difficulties. We had no difficulties. Corrected and uncorrected misstatements, which seems kind of silly. If there was an uncorrected misstatement, I don't know why I wouldn't fix it. There are no uncorrected misstatements to my knowledge in the financial statements. I always chuckle when I read that one. Disagreements with management, police report, we had no disagreements with management. Management representations, we've obtained a representation letter from the administration and Jackie regarding the fact that we've basically been given everything we've asked for and very timely, in fact. Top of the next page, management consultations with other independent accountants. If either our firm or the district thought it necessary to consult with another accounting firm, maybe on the application of an accounting principle or some presentation in the report, we discuss that here. There's been no such consultations. And then other audit findings or issues in the middle of that 3rd page. If there was anything else I thought should come to your attention, I would discuss that here. I think we kind of hit most of the highlights as I see them in going through the report. And that is really basically it. The rest of it has to do with the information that's provided for PERA and OPEB and required information that's kind of some boilerplate type stuff. So any question I can answer for anybody. And I want to preface it by saying, like I said in the past, if you're looking at this at a later date and have questions, don't wonder about something, I mean, give me a call. It doesn't happen a lot, but people call me, and I'm more than happy to answer anything you got, because to look at this 100 and some pages in a half an hour is a lot to do.
Do you have the numbers, or do you recall what was our general fund balance percentage like last year or
yeah,
the
I
year
do.
before?
Yep.
Just to do a comparison.
Yep, I do. I guess got to get the right page here. I should have mentioned that. I actually wrote a note about it. You were at 40% last year, so you dropped 2%. You were at 38
I
this
thought
year.
we'd been in the low
Yep.
40s.
Yep, yeah. You were the year before that, we were in the 30s, I think. We were a couple ticks lower, so we went up, down, and
Okay, so
kind
we've
of, but
been
we're
floating
bouncing
right
around.
in-
No significant variances at all.
So we've been floating right in this general range.
Yep. Yep, in 2021 was 37.9.
Okay.
Explain to me too, what is the significance of being within those ranges? The
It's
25 to 34?
you're maintaining enough fund balance, Tyler, you're maintaining enough fund balance to fund activities without any revenue. So it's like surplus. It's like, you've got that much equity. You could, you could budget deficit to that dollar amount. Now, you could wipe it out. I don't encourage that, but you've got that much
So
rainy
you're
day.
over, we have
Correct.
more.
Yes, you've got that, you've accumulated that many dollars of fund balance by being having revenues greater than expenditures in prior years, and that continues to build. It's like taking your net profit and sticking it in a savings account, that's the set aside, if that makes sense. Yep, that's the set aside, so that's there, years ago when districts were able to generate a little fund balance, and then we had some budget issues at the state and some revenue shortfalls.
Sure.
That's what a lot of them got by for 2 or 3 years on, was having been prudent and had some fund balance built up and they ended up with having deficits for 3 or 4 years, but they had that to go against.
Or even, I don't think it was too long ago when the state funding wasn't available.
Right, during the tax shift years and that type of thing, yeah. Now, the scary part of having fund balances, and this has been many years ago, because I just started my 41st year this year, there was a point in time when the state had a limitation on the amount of fund balance you could have, X number of dollars per pupil unit. And once you were over that, they started lifting money from your allocation.
They used to have that with community ed not
Yeah.
that long ago.
Yeah,
8 or 9
it was
years
there,
ago.
and it was at the general ed level too. They said X number of dollars, take it times your pupil units, and they just whacked it right off the top of your general ed computation. So for the districts that were prudent and had some set-aside money, you got penalized.
Sounds like the government, as it say.
Yeah, those are very frustrating times.
But I suppose they don't want you sitting on a big balance for the taxpayer.
Well, and then, no, and that's very true, that's very true, but most of the districts had a plan in place, that something was gonna take place. And obviously, your job's not to sit and accumulate fund balance, it's to provide education and.
But you need
that
enough
type of
cushion
thing.
there to run your
You've
business.
gotta have some rainy day monies. Yep. That's what I have for you this evening. And again, do not hesitate to call me if you have some questions, because it's very condensed. There's a lot of information that comes together to make this a readable document.
Well, I guess I want to thank Matt for that,
Yeah, it was
and
very
Jackie
good.
for all your work on that too. 'cause that's
It's
very
like,
important.
like I
That's
said,
good
that
information.
adjustment page was 4 to 5 pages of adjustments because of the aids we computed and things we did that Jackie has undertaken to compute.
Good job, Jackie.
So Jackie, can we buy stuff for the kitchen and store it in the fax room?
Sure, I'm not.
Perfect.
Yeah,
No, in the fax room.
that sounds great.
I know where she's getting at.
Yeah.
Can we move kitchen stuff to the fax room and buy new kitchen stuff?
She's trying to figure
It's
out.
all in how you say
Oh,
it.
no, I know that, this conversation's been had in other districts, I hear you.
It's all kitchen equipment.
Right.
All
Well,
right,
it's kind of old for our kitchen. Let's buy a new one. Let's move it down to the bathroom. I agree with that.
thank you, Matt.
No,
Yes,
no
very
problem.
good.
Thank you.
Like, don't hesitate to call if you got questions, we're always around.
Okay.
Okay, you get out of your hair then.
Five
Thank you.
5.11, approval of the audit report and journal entries.
So
Can I-
moved.
I have a motion, can I get a second?
Oh. One for the audit report. One for the.
Okay,
Yeah.
okay. A motion for the audit, I'll look for a motion for the audit report.
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Hi.
Opposed, same sign. Motion passes. I'll entertain a motion for the approval of the journal entries.
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. Done.
Thanks again.
Thanks, Matt.
Thank you.
5.2, truth and taxation. 5.21, discussion of budget and proposed property tax.
All right, well, board members, this is our truth and taxation hearing time, and we will work on getting this all fired up. I see, there we go, we got, can hear it?
It's coming.
Just warm it up. You're good.
All right, so for our public and for our community, this is our truth in taxation hearing. It's a public hearing that's required by state statute that we conduct. This evening I'll go through the presentation. It was prepared with Jackie as our business manager as well. We'll both stand ready for questions as we go through the presentation. But we'll go through and just initiate any discussion that might be required. First of all, we'll start with the big picture. Why do we have a truth in taxation hearing? It goes back to a law that was passed in 1989, and there's really two major basis or requirements that we have, that it deals with our tax statements and that there is a public hearing, and it is regarding for payable 24 levy. So we're talking about the fiscal year 24 budget, and it is an opportunity to afford the public comment time for anything that may be required. So again, as I stated before, this is the school's annual required hearing to meet the truth in taxation requirements that are outlined in Minnesota statute. So, who sets the school levy? There are components of the levy that are a blend of some things from the state, but also you have some voter-approved items. The state gets into the general education formula, things that you just heard about, relative to operating capital, career and technical education. And then we have our local effort, which is our operating referendum or our building bonds. Those are the locally derived tax impacts that we have. Property tax is determined by a number of factors. County assessor determines market value for property, and we also know that the state legislature sets formulas that then impact tax capacity, and that impacts different types of property, as you know, from residential, commercial, ag properties, those types of things. And then there is a calculation on the tax capacity that gets back to each parcel. The county auditor then looks at all those factors and then ultimately comes up with a rate. And there are certain levies, as is denoted there, spread based upon market value rather than tax capacity. And again, that's based upon the different types of property. So who collects? Oftentimes you hear about the impact of who is collecting taxes and who is collecting the aid. And this is directly from the Minnesota Department of Management. As you can see referenced at the bottom of the slide, 63% is collected by the state, 7% by school districts, and then local non-school districts, local government aid, for example. And then you can see where things get expended. 40% stays at the state level. Some of it comes back, obviously, to the school districts, and then local non-school, again, other governmental agencies are where those expenditures go. This slide demonstrates where the resources end up actually go, and you can see that there was a slight drop in the blue line in 02, and then that has slowly gone up, but not in comparison to non-school local government. That's predominantly cities, local government aid in particular. And then the statewide gets into some of the like lake properties and those types of things, and commercial properties. Those things have maintained a relatively flat trajectory, as you can see. So the expenditures in the schools or levies in the schools are certainly being outpaced by other factors that are beyond what we control and influence. So how about us right here in Pipestone? You just heard the report that came from the audit. You can see our revenues and our expenditures. Some of this is information that you just heard. Our food service, community education fund, debt services and building constructions, and you can see how that shakes out at the very bottom line there of $21.6 million compared to $20.9 million of expenditures, so a net gain of $750,000. And again, that's taking in aggregate all funds. So we'll take a quick look at different property classifications and values. This is a proposed tax statement. Kind of gives some breakdown on what goes into it. First, you have your property classification and market value. And then that's sent in the spring of 23, doesn't change. And then the 24 statement in the spring, and then it does provide in the statement if somebody wishes to make an appeal, how they can go about making that appeal, where it can go. So This slide is just helping people understand the appropriate way to read their tax statements when they arrive. And these are the effective tax rates that are established. You can see the different estimates right now as they stand. 0.48%, seasonal recreational, 0.79. The homestead rate for residential homestead is 1.14%. Apartments, a little bit higher at 1.4. Public utilities, 2.5, and then 2.59 for commercial and industrial properties. Again, those are the established rates. You heard mentioned earlier in the audit report the ag to school tax credit, obviously a significant impact for our district, as you'll see in the next slide, but it's something that came into effect in 2017, and it does affect multiple levies, as you can see. The reduction is really targeted around ag, particularly farmers and timber owners, so again, the areas that are greater Minnesota or outstate Minnesota. And it remains in effect at 70% in 2024 as it had been in the past. And it does come from state income tax as well as sales and other tax revenues that are generated by the state. So it's the aggregate collection and then distributed based upon the formula set for the ag to school. And the ag to school credit for our district 2022, 2023, and 2024, again, stayed established at that 70% mark, which it was in fiscal year 23. And as was referenced before, you can find the ag to school credit right on your tax statement when you look at the proposed tax section under that step 2 there where that is identified and delineated. And this slide really highlights where that ag to school is very impactful and certainly not a surprise. There's a lot of rich farmland that is contributing and is in a way impacting what's going on, because the districts that have a lot of farmland like Pipestone area schools, and then of course some of the bigger timber areas that you can see up in the northern part of Minnesota. So we have our local option revenue and voter approved operating referendums that are here, and again these are just showing some different numbers relative to the impact of levy and state aid in each of those areas in the local option revenue and operating referendum. So what are some school factors affecting pay in 24? So again, anybody that's reading their tax statement might wonder what are the factors that are caused by the school. Really not too many when you start to look at the impact. There could be a change in property valuation, changes in student enrollment can be a factor, valuation of property within the district if there was a major development, for example, and that would impact valuation district-wide, or if a mining situation occurred. Also, there are some local decisions and things that may occur that make those determinations. And then some legislative changes ultimately we know have impacts on us, and in particular the local option revenue, excuse me. So here's a picture of the overall operating referendum, and it cuts off just a little bit. So the question that lays out, how does our district compare in operating referendum compared to others? This is information that is gathered and collected and then presented by the Minnesota Rural Education Association. It's an organization our district belongs to that advocates for rural schools in greater Minnesota. Currently, our district sits at $474 per adjusted pupil unit. The median district, or the middle, not the mean, the middle median district is 504. In the upper quartile referendums that you see, obviously there's well above median. You'll notice a pretty significant concentration around the Minneapolis-St. Paul metro area. That's $1,038. That's the upper quartile. There still are 94 school districts that have $0 operating referendum. Now that doesn't mean they don't have a need. It could be an indicator of some other revenues that they get that some districts don't. For example, federal impact aid. Districts that may have a reservation, for example, they get federal impact aid that we don't. So that could be a factor among others. So long-term facility maintenance, we're required to have a 10-year plan, and you can see that we've looked at our 10-year plan before. We know that those plans can and possibly might need to be adjusted. This identifies what portion is state aid and what is local share. You can see that the bulk of it is local share. And then there is a reflection of this under proposed property tax notice under other levies. So as we wrap up and we start putting this all together and completing our public hearing that we have for our truth in taxation, this is all relative to pay 2024 levies and how it relates relative to the levies from pay 23. You can see that right now we are projecting a decrease of 2.36% in the general fund, a slight increase in our community ed fund at 2.41%. General debt service, again, this should not be a surprise because of what's going on with construction projects in the district. 21.74%. OPEB not provided, and then we do have a total, as you can see, a change of 10.17%. And again, I think it's really important to note on the bottom, egg to school, 70% credit again, as was already referenced in the previous slides. So if people want more information relative to property tax and property tax relief, there's a number that is provided. Certainly the county auditor is another person that they can call, or they can certainly call the district office, myself, or Jackie Kennedy, our business office person. Business services will certainly be happy to answer those questions that people might have. And with that, board members, if there are any questions, myself or Jackie will be happy to answer them and address whatever you might ask. But again, this is a requirement that we have, and this does conclude our hearing for our truth in taxation.
Anybody have any questions?
I just want to say thanks to Jackie once again for helping compile this information. And I didn't get to say it publicly when the auditor was here, but I don't think there's a finer business manager in Southwest Minnesota. So,
Good job,
Not a very
Jackie.
big area.
Thank you, Jackie.
I agree.
I agree.
she does incredible work.
I've been here since August and
All right, moving on. Number 6, consent agenda. Everybody had a chance to look over the consent agenda. Is there any questions? Can I get a motion to approve 6.1 through 6.3, the consent agenda?
So moved.
Second.
I have a motion and a second to approve the consent agenda. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 7, financials. 7.1, review of budget year-to-date.
We're currently at 32%. Last year at this time, we were at 36%. I had a couple budget transfers, but no amendments yet, so it looks like we're where we should be.
Perfect. 7.2, approve treasurer's report for November.
Cash balance at November 30th, 2023 is $9 million. It's good. What else to say? I do bank reconciliations, and this is our cash, so I mean, cash balance,
yeah.
that's what you have.
Can I get a motion to approve the treasurer's report for November?
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 7.3, approve 2023A bonds treasurer's report for November.
And this is the additional bond money, so there was some net cash activity, there was one disbursement, one invoice that we paid, and the other difference would be the interest income. So the cash balance at the end of November was $2.8 million.
And with that, when we receive an invoice, I am working with Kraus Anderson to validate and verify the invoices that we receive from TSP as part of our process to address those before I sign off with Jackie. So we're creating our own checks and balance system in that process.
And once we get going into the project, you were familiar, when we built the elementary school, I would have the budget, and what was spent.
Yep.
Yep.
So as soon as we get further into it, I'll present.
Okay. Any questions? Can I get a motion to approve?
So moved.
Second?
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 7.4, approve regular bills for December. Everybody had a chance to look them over? See anything out of place? Any questions on? No?
I move that we approve regular bills for December.
I'll second.
I have a motion and a second. All those in favor signify by saying aye.
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 Opposed, same sign. Motion passes. 7.5, approve high school activity bills for December. Again, everybody get a chance to look through. They get a motion to approve the high school activity bills for December.
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 7.6, approve 2023A bond bills. Everybody good? Questions? Can you get a motion to approve the 2023A bond bills?
So moved.
Second?
I have a motion and a second. All in favor signify by saying aye.
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 Opposed, same sign. Motion passes. Moving on. Number 8. 8.1, board reports and updates. I'll start. We've been negotiating with the teachers. And how many, we've had 2, 3? Going really well. Lot of verbiage changes, finding a lot of changes that just make sense, I think, for both groups. We're meeting again tomorrow, but so far, I think even they would agree that it's been going really well. So, you feel the same, don't you, Mark?
Correct. It's been a whole lot of open dialogue.
Yeah.
Just communicating back and forth, give and take. It's been-
Yeah, we've yet to, go to separate rooms and discuss on our own. We're, just kind of open discussion and coming to a conclusion that everybody agrees with and moving on to the next item.
Good.
Been very refreshing.
We had a policy meeting. We went through the snow days versus e-learning days. We kind of decided to leave as is and gave Clint kind of the administrators in general team kind of open to where, what works best for each day.
Yeah. Give them discretion, what they
Yes.
feel is best.
Yeah.
Okay?
So we did not change anything on it at this time, and it's on for approval tonight. I think that's the only thing we talked about that day.
Yeah, yep.
Yep. And then we had a facilities meeting, talked to, what was the name of that place?
Trumco?
Yes, Trumco.
About the roof.
About the roofs, yep. Very good information, and kind of figured out better where we're at with it, I think. It was a.
I felt a lot better
I
coming
did
out
too,
of it.
I did too. There was a lot of good information, and
I think we have an idea and a
Mhm.
plan and a time, how much time.
yes,
I think that was the biggest part. What's our
Yes.
window look like?
Well, and even helping educate the staff on
Right.
things to be watching, taking care of, things to fix.
Replacing all the tiles, for
Yeah.
example, so we have
Yeah.
a better understanding of where
Where's it coming from?
the leaks
Yeah.
are coming from.
Is it current or has that been fixed, but we
Right.
don't know with the tile?
Yeah.
So just getting a handle on where we're gonna be.
Yep.
And we are at the lifespan of the roof on this building simply because it's
Just
those
20 years.
ballasted roofs last 20 to 25 years, and that's about where we're
Yep.
at, so.
Yep.
we
It's
just know-
definitely something we gotta start budgeting
Yeah,
for,
start planning.
considering, yeah.
Anything else?
I didn't know, I think that's the only ones I went to.
Anything else from anybody?
I want to say thank you to all the administration for the staff Christmas party. I think you guys did an amazing job. Decorations, it was a lot of fun, good food. Very good job. I
Yeah,
think the
thank you.
staff really appreciated it, and
I had a great time.
hopefully it just gets bigger, as time goes
Yeah.
on. But yeah,
It
Boy,
was-
now there's pressure, Todd.
I
Hopefully
know.
it gets bigger.
There is, because
Big-
I saw Chrissy do musical chairs.
Oh, yeah.
I want to.
I didn't realize how competitive she is.
Well, I'm very competitive.
Oh, I had a suspicion. That's why I got off the stage when I saw who was coming on.
even Clint's wife was. I thought Clint's wife was pretty. She was in it too.
Oh, she was in it to win it.
yeah, I was gonna say it.
Like I said, that's why I cleared the stage.
It was a great time.
It was a lot of fun though. It was, and it's fun. It was fun to see the staff relax,
was.
having
Yeah.
a good time, and just it was good.
Lot
And
of
to see the
collegiality.
elementary and the middle
Yeah.
school and high school all just get together and
It's good to see. I mean, that's one of our goals is to change the culture, and I think that's one step in the right direction. So, good job.
Yep.
Pass it on to Jennifer.
oh, well, I talked to her earlier. She's so not feeling well.
You got her sick.
I had nothing to do with that.
Coughing all
I
over
was
stuff.
sick.
Nope, it was very nice.
All right, moving on to number 9, Administrators Report. 9.1, Superintendent's Board Report.
All right, well, kind of carrying the theme, just a thanks again to Todd and Jennifer for what they did with the party, getting that together. It was an incredible group effort. We had a lot of fun and planning it, putting it together. We had a lot of support from JBS with donating some food, the pork loin. We had support from Taher Foods. We had support from TSP. Kraus Anderson has committed support. So again, just a lot of great people that came together to make that possible. The school board convention coming up obviously really soon. I think it's still not too late to get involved if you are so inclined. Important item that I wanted to highlight is we had a recent discussion with food service, our food service provider, Taher Foods. We are at the end of our contract. It ends this fiscal year. And we do have an option in there to renew it one additional year. They have assured us that they are not interested in that under the current negotiated contract. And they are experiencing some losses, and they want to go through, they said even if we exercise the right to extend it a year, that they would not be interested. They are interested in rebidding it. So we are going to be rolling up our sleeves and getting to work on that. That is quite an extensive process to put together the bid, just because you're dealing with food and federal funds, so there is an extensive process to do that. I haven't done that for quite a few years, so I'm going to work with Jackie really close and Deb. We're going to have quite a team that's going to make that process happen, but we have to get going on that relatively soon so that we give enough window of opportunity for any other potential food service vendor to consider applying. Earn safe and sick time. We were hopeful that this evening we would have, for the board's consideration, 2 MOUs. One with, well actually 3, one with our teacher group and one with the other bargaining units that we have in the district. Unfortunately, we did not receive those. We had worked diligently last week with legal counsel, and even up until this morning about 11:30, Jackie, we were still trying to hammer it out, and it wasn't a surprise. Ingrid came and saw me at the end of the day and said, we just don't have enough time, and I said, I agree. So we can, I anticipate, start the year knowing that we have our January 8th meeting, and those MOUs can be acted upon at that point in time. And there are some changes that we are going to have to make relative to our leave that accommodates for the earn safe and sick time. And there are so many nuances from if we front load to if it's an accrual of sick leave, and that even within one bargaining unit becomes really dynamic because our paraprofessionals, for example, we accrue on the first year, but then they are front-loaded on the second year. So even that creates some dynamics that we are trying to resolve in a way that makes sense. And what I want is it to work well for our office staff, because it just adds more complexity to managing leave and how that happens. Facilities work, as was referenced, is going on. We did have a meeting last Friday, so it was after this report was drafted, where we did a walk with a track vendor, the company that installed the surface of our track previously, and they were amazed at how our track is stood up. That the surface has no cracks in it. There are a couple of wear areas, and we have asked for a solution that they might provide that could manage the current surface as it exists and kind of match up what we heard through our soil borings report when we had the workshop meeting, to get us maybe to that 5-year mark and then address the track. So we're getting some numbers from them that we'll be able to talk about and probably again workshop out. We are going to include the surface vendor in a call coming up with TSP and Kraus Anderson, just to kind of lay that out. And the reason it was suggested that we could look at this path was because there are clearly no cracks that are migrating from the base through the surface, because there's no cracking at all. There are a couple of places where there's been some heaving in previous years, but those heaves go up and then they settle back down. So again, the track surface vendor was absolutely impressed with the condition of our track the way it is right now. So that may give us a little window, given what we heard at the workshop meeting about those soil borings and what we were discovered with those. So that's some positive news. And then the other question that was asked that I wanted to report on was, how much time do we have to expend those funds? We did reach out to PMA, and you'll see that noted in the report that PMA said that we must expend those bond funds and the investments earned from those bond funds, or the earnings from investing those bond funds, no later than September 20th of 2026. So there is a window there, obviously, that the board has to exercise relative to how those funds are utilized. That's all I have for this evening.
One question on the food service. What do they mean by an extra year?
So we had in the original contract an option to extend a year.
Yep.
And if we exercise that option, but it had to be mutually agreed upon between the vendor and the school district.
I was gonna say, what good does it do to give an extra year if nobody wants to agree on it?
Yeah.
It really doesn't mean anything. You're gonna
Exactly.
renegotiate it at that point anyway.
Yeah. So that's why when I met with them, they said effectively the contract will be done as in its current form as it was negotiated at the end of this fiscal year. So June 20.
If you're gonna renegotiate, you just well extend it and move on, right?
They can't really renegotiate it. If it's a fixed meal contract, the state or USDA says you can only charge this much more for a fixed meal. So there's really no negotiation.
Right.
As such as, what they wanna do, I assume, is right now we have a fixed meal contract. I think they want a reimbursable meal
I wonder,
contract.
that's what they want to move to, is
You can't.
reimbursement.
Okay. But the 1 year optional extension really doesn't
Doesn't
mean anything.
exist, no,
Because
because there's no mutual agreement to do it.
Yeah. So you're gonna
Only
rebid it
if
now
it-
for 2 years or 3 years or?
Only if it was working well for everybody and we just wanted to
Three.
extend a year.
Typically a 3-year contract.
Without going out for bid again, yeah, without going through the work of the bid.
Yeah.
That's the reason for the
Yeah.
option,
Yeah.
is in case everybody
If
does
it's
agree
working-
on it, yeah. But food costs.
You can gain a
changes
year
so much, yeah, without having to go through the
Right.
extension and rebidding.
Yep.
So, like I said, we're gonna get to work on that, obviously sooner than later, as soon as we turn the calendar to the new year, that's going to be something that's gonna take quite a bit of lifting to get that bid process together and then actually bid it, vet any potential vendors that may come forward to make certain that they have the capability, not just in terms of managing the contract, but also staffing the program, because they manage all the staff.
So all the staff is an employee of Topper?
Correct.
Not an employee of the school district?
Correct.
Yep.
And that did create an issue in the previous bid process because of a non-compete clause that existed with the director of food service.
So is that?
And a vendor said they did not want to bid because.
Is that still in place though?
And that's my understanding.
Doesn't Minnesota no longer recognize non-competes?
That's one of the things that we gotta figure out in this whole process. I've heard that, I haven't verified.
I've heard that, but I don't know if that's 100% or not.
Yeah, well, something to
Might
check
be
into.
curious.
Because that would
I
limit
don't
you
know that
who's
for
gonna
sure.
bid on it.
Correct.
Yeah. Then you're at the mercy of them if you have nobody
Well,
else. Yeah,
makes it an interesting process.
I can see that when you have them, yeah.
Any other questions for Clint? 9.2, Principals Board Report.
And I'll just hand it off to Todd, knowing that Jen obviously isn't here this evening, so Todd has said that he was able and willing to cover both principal reports, so.
Absolutely. The elementary is a mess. No. Don't tell her I said that.
Nope, it's not
Already
taken.
captured.
Oh, whoops. No, the elementary is in excellent shape. Okay, no, for the middle and high school, our STAR students decorated a Christmas tree at the Hiawatha Lodge. Our STAR students are also doing a food drive for the Blessing pantries around town. Middle school, high school will be doing door decorating in their prime classes, promoted by student council and STARS. Middle and high school staff are also had a dress-up month for Christmas for the month of December that staff and students took advantage of and had a good time doing. The middle and high school teachers and staff will be participating in Marshmallow Madness, but that is coming to a short end this week, so we may have to do that in January. It's a lot of fun. Fall sports are now getting underway. We will also be doing a gratitude Christmas tree for middle and high school. And we have the middle school Arrowway winners. They were given gift certificates and a pizza party during lunch.
And actually, we meant winter sports.
I caught that on there.
What
too.
did I say?
Fall sports.
Fall. Sorry. Yes, that's what I
It's
meant.
technically not winter yet, right?
December 21st.
Right.
That would be the winter equinox. Okay, so then for the wonderful things happening at the elementary school, Terrific Kids Celebration was Friday, December 1st, and they celebrated two second graders from each classroom. Ms. Moravitz also visited Redwood Falls to observe kindergarten through sixth grade classroom using the ELA curriculum, CKLA, and that was on Tuesday, December 5th. She found that to be very worthwhile. There is a date change for student-led conferences. Thursday, February 22nd, 2024. This date change is due to the fact that there is a high chance that Pipestone will host wrestling the evening of the 15th. And then they also have holiday dress-up days for the month of December. And that should do it for the principal's report.
I'll just highlight real quick a little bit more about the parent-teacher conference component. The 15th is the sectional, and it always goes to the high C. And just because of how things are projected with our wrestling team right now, there's a very real likelihood we could end up being the high seed and host. to name both gyms, and just with the number of cars, people in and out of the building, didn't think that was a real conducive environment to say, hey,
Yep.
parents, come on in. And so Jen approached me about that, and I said, yeah, that's a good idea to make that change, because we want that to be a focus time with our staff and our families, and plus we know that we'd have any number of staff members that would want to go and watch and participate in that event too. So, so that's why we're making that change and trying to get that out there for people ahead of time so they can make it, make note of that on their calendars.
So it's February 5th now? Is that what you said?
22nd.
22nd.
Yep.
So you're changing it automatically, even
Yes.
though they're.
Yes,
it
and-
maybe would be,
yeah,
which is
just-
good.
Just to make sure.
Making certain that that is done.
They can plan their
Yep.
schedules that way.
So
And that's
teachers can plan
only
and-
elementary?
Yes,
Yes.
and those are student-led conferences, so.
Any questions for Todd? Number 11, or number 10, discussion items. Anybody have anything? I think we covered it. Board updates. Okay, moving on to 11, board action. 11.1, resolution accepting donations. I'd like to recognize First Bank and Trust for a $100 donation to the jazz band for the entertainment that they provided. Prairie Land Library Exchange, $250 for Teen Tober grant for chess club. And then the Jasper Lions for a $600 donation to the elementary teachers to purchase books at the book fair. Thanks to these three for their donations. Can I get a motion to approve the donations?
So moved.
Oh, second.
I have a motion and a second. All in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 11.2, adopt levy limitation and certification 2023 payable 2024. Any insight on this?
This ties back to the truth and taxation hearing. As you can see, there are a number of pages here, and Jackie and I attended the levy workshop earlier this year, and this has changed a few times since then, but not, Jackie, if you wanted,
They just have issues with their program. So about the time I think everything's okay, then 4 days later, oh, we found this error in our program, so you need to
Changes.
reprint it. Okay, we found, but this should be good.
Okay.
this should be the final report.
Any questions on this? Can I get a motion
List
to,
the amount.
what?
You need to list the amount in your motion.
How much is the amount? I don't have it open.
3,925,252.19.
I didn't know how to say that very before.
Got it. Can I get a motion to adopt levy limitation and certification 2023 payable 2024 in the amount of $3,925,252.19?
So moved.
Second.
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 11.3, approved 23-24 e-learning plan. We discussed this in the board updates. I don't know if anybody has any further questions. Can I get a motion to approve the 23-24 e-learning plan?
So moved.
Second?
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. 11.4, approve a request for a variance for Dr. Clint W. Willert for stand-in community education director. Dr. Willert.
Yeah, so I'll tell you, I drew the short straw on this one, I guess. The reason that this is required is to address a state law requirement that we have a licensed administrator covering our community education. And at first, we thought that we didn't need one because of the size of the district. However, because of, we have to account not just for the proper community of Pipestone or Jasper, but it has to be the entire population of the district. And because our population is as it is, we are required to have a licensed administrator, a licensed community education director. Well, we don't have another one on staff, but what we can do is name me, and I can fill out a variance for this. And then this is something that we'll have to work on figuring out as we go forward on how we're going to fill this with a licensed community education director going forward. Again, it's one of those things that we'll have to figure out staffing wise next year. This would not prevent us from naming me as the administrator of record and then hiring or having somebody help coordinate those activities, which we do have somebody on staff that's interested in that option possibly.
They're just not licensed yet to be able to do that, or?
They aren't licensed, and I don't know that they have an interest in pursuing the license.
Okay, so is this variance something we can do every year then, if that's the case with?
I think we can do it a maximum of 3 years. I believe it's 3.
Haven't got that
but
far yet.
We'll have to figure that
Yeah.
out.
Any other questions? Can I get a motion to approve the variance for Dr. Willert for stand-in community education director?
So moved.
Second.
A motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. Number 12, to entertain a motion to adjourn.
So moved.
Second?
I have a motion and a second. All those in favor signify by saying aye.
Aye.
Opposed, same sign. Motion passes. We're adjourned.